If you've ever stood on a trading floor at the opening bell, you know the feeling. It's a storm, a rush. The noise is so thick you can almost reach out and grab it. And in that storm, if you don't learn how to listen, if you don't train your eye to catch the faintest glimmer, you'll miss the signal that matters. Now, I'm not talking about the chatter you hear from the crowd or the tips that fly around like confetti. No, I mean the signals the market itself gives you before the papers print the story, before the crowd knows what's going on. And let me ask you something right at the start. If you could read those signals earlier than the next fellow, what would that be worth to you? The market, my friends, is always speaking. Always. It's a living, breathing creature. It tells you what it's about to do if only you'll bother to listen. Trouble is, most folks don't listen. They think they know better. They rely on hope, on guesses, on tips. But the market doesn't care about your opinions or mine. It doesn't care what the newspapers print. The market moves first. The reasons come later. You see, if you wait for the reasons, you'll always be late. Haven't you noticed that? I learned long ago, if you want to survive in this game, you've got to read the tape. And I don't just mean staring at the ticker. I mean learning to sense the pulse in the price action itself. The market tips its hand, ever so slightly, if you're sharp enough to catch it. That's what I call early signals. They aren't shouted at you. They're whispered. Do you have the patience to hear a whisper when everyone else is yelling? Think of it this way. You're watching a stock that's been quiet. Not much doing. Then, suddenly, you notice small buying coming in, nothing spectacular, just a steady demand that keeps showing up. The price ticks up, not by leaps, but by nudges. It doesn't fall back the way it used to. That's the market sending you a telegram, plain as day. Now, most traders shrug. They say, oh, it's nothing. But then, a week later, the stock is running, and they ask themselves, why didn't I see it? You ever asked yourself that after watching a move you missed? Here's the truth, the big moves always begin in silence. Like the first tremor before an earthquake. And if you wait until the whole town is shaking, you're too late. That's why I tell every trader who wants to last in this game, learn to recognize accumulation and distribution. Those two words are the heart of this business. Accumulation is when the smart money is quietly buying up stock while everyone else is asleep. Distribution is when they're unloading it to the crowd after the move is already underway. The early signal is in that quiet shift. Are you following me so far? Let me give you an example. Back in my day, when I watched Union Pacific, I noticed weeks of small, steady purchases. Nothing dramatic, but the stock wouldn't go down, no matter what the market was doing. That told me something. It told me someone with real money was taking all the stock that came on the market. They were building a position. They were preparing for something. I didn't know the reason yet, and I didn't need to. The reason didn't matter. The signal was enough. Now ask yourself, would you rather trade on reasons or on results? The crowd loves reasons. They love stories. They'll tell you a dozen explanations for why a stock should go up or down. But the market doesn't move on stories, it moves on orders. It moves on buying and selling. That's the only law that matters. And when you see the buying begin before the headlines, that's your edge. Do you see why the signal always comes first? Now, don't mistake me. Early signals are not about jumping at shadows. The market throws out plenty of head fakes. If you chase every tick, you'll be broke by Friday. What I'm talking about is a pattern that builds over time. Consistency, a change in behavior. You've got to train your eyes like a hunter watching for tracks in the snow. One footprint might mean nothing, but a trail that's your signal. Have you ever noticed how a stock starts acting different before the news breaks? Here's a simple truth, the insiders, the people who know, they always act before the news gets out. Always. They can't help it. If a company is about to land a big contract, somebody starts buying. If a company's in trouble, somebody starts selling. And those somebodies aren't fools. They've got money, and they use it. Their footprints show up in the tape. The trick is to learn how to see those footprints when they're fresh, not after the whole street has marched over them. Wouldn't you like to catch that kind of trail early? I'll tell you something else. Early signals aren't just in the price. They're in the volume. Price is the market's voice, but volume is the market's breath. You ever watch a stock move up on heavy volume? That's the market shouting. But the whisper comes when the volume begins to swell just a little, quietly, before the move. It's like a campfire before the blaze. A spark, then a flicker, then a flame. If you wait until the forest is burning, you'll never get the best of it. Haven't you ever wished you bought in before the rush? And let's not forget the market loves to fool you. It's a master at deception. It will run up a stock just to shake in the amateurs, then knock it down and take their money. But the real signals, the ones that matter, they don't vanish after a day. They build. That's why patience is the rarest quality in this business. Everybody wants action, but action without understanding is suicide. Can you sit still long enough to see the pattern develop? I remember when I was a young trader, I thought every wiggle in the market was a signal. I was jumpy, always chasing the next move, and I paid for that education dearly. But over time, I learned to separate the noise from the music. Noise is what the crowd hears. Music is what the smart money plays. You've got to tune your ear. Early signals are like the opening notes of a tune. If you know the melody, you can recognize it before the whole orchestra comes in. Ever caught a song in the first bar and knew exactly what was coming? Now, some of you might be asking, how do you tell a real signal from a fake one? That's the great puzzle, isn't it? There's no easy answer, no formula you can paste on your wall. The market doesn't give you certainties, only probabilities. But here's what I know: a real signal has persistence. It doesn't vanish overnight. If a stock is under accumulation, it will keep showing strength day after day, even when the market wobbles. That's your clue. It's not one day's action, it's the character of the move. Do you see the difference? And here's another thing: never fight the general market. You can have the best signal in the world, but if the tide is going out, you'll drown. Early signals always appear first in the broad averages, not just in individual stocks. You watch the leaders, the generals, the ones that set the tone. When they start to weaken, that's not noise, that's a signal. And when they start to firm up before the rest, that's also a signal. Have you been watching the generals or just the camp followers? The market speaks in whispers before it shouts. That's the plain truth of it, and most men miss it because they are waiting for the fireworks, waiting for the cannon, instead of listening for the faint crackle of the fuse. The whispers are there every single day, but you have to train yourself to recognize them. They are not grand proclamations. They are not painted in bold letters across the financial pages. They are quiet, almost invisible to the untrained eye. And yet, if you catch them, you are already a step ahead of the crowd. Let me ask you, how often have you wished you'd known a move was coming before it arrived in full glory? When I say whispers, I mean the subtle changes in a stock's character. It may be a little firmer tone to the bids. It may be a reluctance to drop in price when the whole market is soft. It may be a slow but steady swell in trading volume without any news to justify it. Each one on its own seems insignificant, but together they form a whisper that tells you something is happening here. Do you see the difference between noise and a whisper? Noise is loud and distracting, but a whisper is focused, deliberate, and meant for those who are paying attention. The crowd wants shouts. They want big moves and big headlines. They want the excitement of knowing why something is happening. But by the time the market is shouting, by the time the headlines are written and the experts are explaining, the move is already well along. The best money has already been made. The whisper is the earliest clue, the soft turning of the wheel before the ship visibly changes direction. Have you ever noticed how the crowd only becomes interested after the easy part is gone? Think of a stock that's been drifting along uninspired, unremarkable. Then, out of nowhere, the behavior changes. Buyers appear more regularly. The stock refuses to go lower even when offered. That is the market whispering to you. It's not screaming, "Buy now!" It's not promising anything. It's simply hinting, leaving a trail. You need the patience and the discipline to lean in and listen. Can you discipline yourself to notice small details others ignore? I've watched countless traders chase after shouts. They read the newspapers, they listen to tips, and they wait for confirmation that the crowd is already moving. They want certainty, but certainty in this game is expensive. By the time you're sure, you've already lost the edge. The whisper is uncertainty dressed as opportunity. You won't know for certain, but you'll see the signs before anyone else. Isn't that where the profits are before certainty becomes obvious? Let's talk about why the whispers come first. It's because the people who know, the insiders, the professionals, the ones with real information and real money, they move quietly. They don't announce themselves. They accumulate stock carefully, so as not to drive the price too high too soon. Their footprints are small but steady. That's the whisper. The crowd never notices until the buying becomes obvious, and then it's too late. So I ask you, do you want to follow the crowd, or do you want to follow the footprints that appear before the crowd even looks down? The whisper might also come from the market itself, in the broad averages. You might see strength building in the leaders while the general list still looks heavy. That's not an accident. That's the whisper of a turn, the beginning of a shift in trend. The market never changes direction without telling you first. But it tells you in whispers, not in shouts. The shouts come later, when everyone is convinced. Wouldn't you rather catch the beginning of the turn instead of the end? Patience is what makes a whisper audible. If you are restless, always looking for action, you will miss it. The whisper takes time to become a message. You must watch day after day, comparing today's action to yesterday's, the week's pattern to last week's. Slowly, the picture sharpens. A stock that was weak begins to show resilience. A sector that was ignored begins to see steady buying. The whisper becomes a murmur, and if you are sharp, you act before the murmur turns to a shout. Do you have the patience to let the picture reveal itself, or do you demand instant proof? Let me give you a scene. Picture yourself at the ticker, the tape rolling. You notice a stock that should be falling with the market, but isn't. You see buyers taking every bit of supply that comes out. No surge, no panic buying, just steady hands absorbing the stock. That's a whisper. If you are too busy chasing the wild moves elsewhere, you'll ignore it. Weeks later, that stock is running and everyone is piling in. They hear the shout. You had the chance to hear the whisper, but did you listen? Another whisper is when a stock sells off on bad news, but doesn't break the way you'd expect. It holds firm. The selling dries up. That's telling you the smart money is quietly stepping in, absorbing the weak hands. The crowd will still be nervous, still talking about the bad news, but the tape is already whispering that the worst is over. Do you trust what you hear in the tape, or do you trust what you read in the papers? Whispers aren't only in individual stocks. They're in the tone of the whole market. Before a bull market begins, you'll often see the leaders strengthen first. The whispers are in the generals while the soldiers still lag. Before a bear market begins, the generals weaken, even while the averages are still making highs. That's the whisper of distribution. The smart money is unloading, and the crowd is still cheering the highs. Which side do you want to be on, the one that hears the whisper of weakness, or the one that waits for the shout of collapse? Now, don't mistake whispers for certainty. They don't guarantee the move. They only tilt the odds in your favor. You can't demand perfection from a whisper, but what you can do is recognize that the market is never silent. It always signals, faintly at first, then loudly. If you wait for the loud signal, you're late. That's the lesson. So I'll ask you again when you trade, are you waiting for the market to shout, or are you training your ear to catch the whisper before anyone else? Leaders tip their hand before the crowd notices. That's a truth you can set your watch by. In every market cycle, in every great move up or down, the leaders always show their colors first. The trouble is, most men are looking in the wrong place. They watch the averages, they watch the headlines, they watch the noisy laggards at the back of the line. But the real signal is in the generals, not the foot soldiers. Let me ask you, if you were marching into a battle, would you keep your eyes on the raw recruits stumbling in the rear, Or would you watch the captains up front who know where they're going? A leader is a stock that sets the pace. It doesn't follow the market, it directs it. These are the issues that make new highs before the averages, that show strength when everything else looks tired. When the bull market is about to begin, the leaders are the ones that first break out of their ranges. When the bear market is around the corner, the leaders are the ones that first falter, even as the averages look strong. They tip their hand. But you have to be watching closely to notice. Have you trained yourself to look at the generals, or are you distracted by the noise in the ranks? I've seen it countless times. The tape will show a handful of leading stocks making fresh advances, strong as steel, while the rest of the market is still sluggish. That's no accident. That's smart money moving in advance of the crowd. It's their footprints. The leaders tell you the next chapter before it's written. The crowd, blind as ever, waits for the averages to confirm, for the headlines to declare a new bull run. But the leaders were whispering weeks before. Don't you want to be among the few who catch that whisper instead of chasing the shout? Let me give you an image. Picture a great ship at anchor. The tide is turning, but the ship doesn't swing all at once. First, the bow shifts slightly, then the whole vessel follows. The leaders are the bow. They're the first to turn. The rest of the market is the heavy bulk that follows later. If you're sharp, you see the bow swing before anyone else notices. And if you wait until the entire ship has swung around, well, the easy part of the move is already gone. Can you spot the first turn before the crowd does? When leaders tip their hand, it isn't by accident. These are the stocks the professionals crowd into, the names that attract the first and fastest capital. You don't have to ask why. You don't need the story. The tape tells you the truth. It shows you steady accumulation in the leaders before the market as a whole takes off. You might see them making higher lows when the rest of the board is flat. You might see them rally stronger after each dip. That's their hand tipping. But most men ignore it because it doesn't fit with the averages they worship. Have you ever noticed how the crowd insists on being blind to the obvious? The same is true at the top. Leaders crack before the rest. Always. They start stumbling, failing to make new highs, showing weakness even while the papers are still filled with optimism. That's the canary in the coal mine, and yet the crowd doesn't see it. They're too busy celebrating the new highs in the averages, ignoring the fact that the generals are slipping. When the leaders fall out of line, the soldiers will follow. Isn't it better to know before the retreat turns into a rout? Now, you must understand, not every strong stock is a leader. True leaders stand out over time. They command attention by the consistency of their action. They're the first to surge, the first to resist declines, the first to recover. They carry the market on their shoulders. You'll recognize them if you train your eye, because they act differently than the pack. But to see it, you need to stop chasing the noise. Can you discipline yourself to watch for character instead of chasing excitement? I'll tell you something else. The leaders don't just tell you about themselves, they tell you about the whole market. A handful of leaders advancing strongly, while the rest of the list drags, tells you strength is building under the surface. A handful of leaders breaking down, while the averages look fine, tells you weakness is creeping in. The leaders tip their hand, and in doing so, they tip the hand of the entire market. Why wait for the laggards to confirm what the leaders already showed you? Volume plays a role here too. A leader on the rise will show strong demand, steady accumulation, heavier trading on up days than on down days. That's no coincidence. That's real interest. That's the smart money at work. You don't need to know who's buying. You only need to know that someone with capital is stepping in. That's a signal. When you see it across a group of leaders, you know the tide is changing. Do you really need a newspaper to tell you what the tape is already whispering? I've seen men ruin themselves by ignoring the leaders. They'll say, the averages are strong, so everything must be fine, even while the generals are collapsing one by one. They trust the mass instead of the signal. But the averages are nothing more than the sum of their parts, and if the parts that matter are cracking, the whole will crack too. Leaders tip their hand early because they are where the real demand and supply first shows up. Don't you think it makes sense to watch them instead of the blind crowd? The crowd waits for confirmation. They want the safety of the herd. But safety in the market is an illusion. By the time it looks safe, it's already too late. The leaders don't wait for confirmation. They move first. If you move with them, you have the chance to ride ahead of the herd. If you wait for the herd, you'll pay dearly. So the question becomes, do you have the nerve to trust the signal in the leaders, or do you need the comfort of the crowd? Leaders tip their hand before the crowd notices because they are the place where the truth is revealed first. The professionals who know, the insiders who act, they concentrate their power in those names. Their footprints are visible in the price and volume of the leaders long before the story is told elsewhere. All you have to do is watch carefully. But most traders would rather be entertained than attentive. They want excitement, not observation. They want noise, not whispers. But the leaders don't shout. They whisper first. And that's where the edge lies if you're listening closely enough. Price action reveals truth long before news does. That's a lesson every trader learns sooner or later, usually the hard way. The market doesn't wait for newspapers, it doesn't wait for analysts, it doesn't wait for explanations. The market moves first, and the story comes after. If you're waiting for the story, you're late. And yet, isn't it strange how men cling to stories? They want reasons, they want justifications, they want a neat little package that explains what's happening. But the market doesn't deal in reasons. It deals in results. Let me ask you, would you rather be right with reasons or rich with results? Every tick of the tape is the record of buying and selling. That's all it is. No opinions, no forecasts, no editorials, just facts. A stock trades up or it trades down. That's the truth. Everything else is interpretation. And if you watch closely, if you learn to trust what the price is telling you, you'll see the truth before the rest of the world has a clue. That's the advantage of the trader who listens to price instead of chatter. Have you ever noticed how the tape was already telling the story before the papers printed it? Think about it. A company's about to announce a strong quarter. Do you really think the price just sits still until the press release hits? Never. Someone always knows. They may not shout it from the rooftops, but they act, they buy, and that buying shows up in the price long before the story breaks. You'll see strength, you'll see resilience, you'll see a steady bid underneath the stock. That's the truth. The story you read later is just the excuse the crowd needs to jump in after the fact. Which side do you want to be on? The same thing happens on the downside. A company's got trouble brewing, maybe poor earnings, maybe management issues, maybe a deal falling apart. You think the price doesn't show it, it always does. Selling starts quietly, the stock weakens when it should be firm, it fails to rally when the market lifts. Those are the facts. That's price action revealing the truth. By the time the news hits, the stock has already fallen, and the crowd is left asking, why didn't we see it? Haven't you asked yourself that question before? Price action is the purest signal because it strips away the noise. Everyone has an opinion, everyone has a theory, but nobody can argue with the fact of a trade. If a stock is climbing, it means more buyers than sellers at that price. That's truth. If it's falling, it means more sellers than buyers. That's truth. You can dress it up with explanations, but the reality is already there in the price. Do you trust the truth of the tape or the stories in the paper? I learned long ago that the tape never lies. Traders lie. Analysts lie. Newspapers lie. Hope lies. But the tape doesn't. It doesn't care about your opinion, your forecast, your hopes, or your fears. It just records the facts. Price action is the earliest signal of what's really happening. It's the market whispering, here's the truth, while the rest of the world waits for the news. Wouldn't you rather listen to the whisper than wait for the echo? Now, the crowd hates uncertainty. They want to know why something is happening. They want confirmation. That's why they wait for the news. But news is always late. Always. By the time it's published, the smart money has already acted. The insiders have already bought or sold. The truth was already in the price. If you need the comfort of an explanation, you'll pay for it by being late. Do you want comfort, or do you want profits? You might be watching a stock drift higher on no apparent news. The crowd shrugs it off. They say it's nothing, just random. But the tape tells you otherwise. The tape tells you there's steady buying pressure. Maybe the world doesn't know why yet, but the truth is there in the action. Weeks later, the news breaks new contract, earnings surprise, merger talk, and the stock explodes. The crowd rushes in, too late, but you saw the truth in the price before the story was told. Do you see how much of an edge that gives you? On the other side, you'll sometimes see a stock falter even as the news is glowing. The papers are full of praise. Analysts are raising targets. The crowd is buying in, but the price action tells a different story. The stock won't advance. It sells off on good news. That's the market telling you the truth the insiders are distributing, handing stock to the crowd before the trouble comes out. The truth is in the price, not in the words. Have you noticed how often price action disagrees with the news, and how often price proves right? One of the hardest lessons for a trader is to trust the tape over their own opinions. You might think a stock should go up. You might have every reason in the world. But if the price action shows weakness, that's the truth. Ignore it at your peril. The market doesn't care about what you think should happen. It only cares about what is happening. And what is happening is written in the price. Do you fight the tape, or do you follow it? Price action reveals truth because it reflects real decisions with real money. Talk is cheap. News is just talk. But when someone puts capital on the line, that's action. That's commitment. And those commitments, multiplied across thousands of trades, create the movement in price. That's why price action is the only reality. Everything else is just a story layered on top of it. Wouldn't you rather trade on reality than on stories? I've seen markets rally in the face of bad news. I've seen them collapse in the face of good news. That tells you all you need to know about the value of stories. If the price is moving against the story is wrong. The truth is already in the action. Smart traders learn to stop asking why and start asking what. Not why the stock is moving, but what the stock is doing. Because the what is the fact, the why is the theory. Which would you rather rely on? If you train your eye, you'll begin to notice how often the truth shows up first in the leaders. A handful of stocks will begin to climb steadily before the market as a whole turns. That's price action tipping you off. No news yet, no stories, just the truth showing itself in the tape. Weeks later, the headlines catch up. By then, the move is half over. The whisper of the price was there all along. Did you hear it? Price action is also the only tool you can use in real time. News comes after the fact. Fundamentals take time to gather. Opinions are endless. But the tape is immediate. It tells you right now where the buying and selling are. It tells you right now the truth of the market's mood. That's why traders who live by the tape always have the edge over those who wait for the story. They see the truth as it happens, not after it's dressed up for the crowd. Wouldn't you rather act with the truth in hand than react to a story after the fact? Patience turns noise into a melody you can recognize. That is one of the hardest truths for most traders to accept, because patience is a quality few men naturally possess. The market is full of noise, ticks, wiggles, rumors, chatter, headlines, opinions. Every day the tape is alive with movement, and the temptation is to jump at every flicker as though it were meaningful. But most of that is just static. It confuses you, wears you down, makes you act when you shouldn't. Only patience can separate the real signal from the background noise. Have you ever jumped into a trade too soon? Only to see that if you had waited a little longer, the truth would have revealed itself plainly. Noise has a way of seducing the restless trader. It looks like opportunity. A stock runs up a point on heavy trading and suddenly the whole room is excited. But patience tells you wait. See if it lasts. See if it's real. The impatient man buys on the noise and ends up trapped in a false move. The patient man lets the market prove itself. The difference between the two is not intelligence but discipline. Can you discipline yourself to sit on your hands when the market is full of sound and fury? The melody, as I call it, is the underlying trend. It's the theme that carries through the day-to-day fluctuations. But to hear it, you need to quiet your mind and give the market time to play it out. If you lean in too soon, if you demand instant clarity, you'll mistake a passing note for the song itself. The market doesn't reveal its tune in an instant. It plays it slowly, testing you with false starts and reversals. Patience is what allows you to hear the difference. Do you want to hear noise, or do you want to hear the song? I've sat for days watching a stock do nothing, listening to men around me complain about the boredom. They want action, any action, even if it's meaningless. But I've also seen that same stock, after weeks of dullness, suddenly spring to life in a move that carries for months. The melody was building all along, but only the patient trader caught it. The impatient ones were too busy chasing noise elsewhere. Isn't it curious how often boredom is the seed of profit? Patience also teaches you that one day's action rarely tells the whole story. A stock might break out one afternoon, only to fall back the next morning.